Good morning, everybody. Very warm welcome to Financial Fitness Fridays. This is our winter series. I'm really looking forward to it. I think it's our third series, actually. Very successful last year. A different take on financial education, a different way of delivering it. We thought we'd try to mix it up. People were getting a little bit kind of bored of PowerPoint on Zoom and stuff like that. So this Financial Fitness Friday was born out of the concept of Joe Wicks on the telly in the morning. We said, well, why couldn't we apply this to finance? Why couldn't we make finance a bit more interesting? Oh, I've got the wrong backdrop. Look at that, how embarrassing. I'm going to get told off by my team. I'm just going to switch that. My goodness, how crazy is that? Let's have a little look. Oh, it's not there. Never mind. It was on the different account. Never mind. You're going to have to use my Christmas background. So sorry about that. So my name's Darren Laverty. I work for Second Sight, and what Financial Fitness Friday is about is to deliver some really good, useful financial wellbeing content, delivered in a unique style. It's like a live talk show. I do have a fantastic guest with us today, called Darren Cole. And the theme of today is really about how to use your employee benefits to form a solid foundation for financial well-being. Really important. And there are, there's a whole bunch of key pillars which make up our well-being. And I'm just going to cover those very briefly, and then I'm going to focus on this one particular one. And then we've got some really good questions to ask of Darren to try to bring this whole thing to life. Now, this session takes 30 minutes. Okay, there's a hard stop at 30 minutes. And then what happens is that those of you that need to go, you can go, but others that want to stay around for questions, then I'm going to go through all the questions for another 15 minutes. So we'll take it around to 45 minutes, and then we'll definitely going to end it. If the questions are useful for the audience, then what I'll do, I'll ask those questions so everyone can benefit from it. If the question is a bit individual, a bit private, then we'll pick that up separately and send you an email. At the end of the session, we're also going to be sending you a feedback questionnaire. We want you to tell us what you think. Did you enjoy it? What did you like about it? What didn't you like? Any other suggestions going forward? How can we improve it? So please, please, please tell us, whatever you think. Be honest. We want the honest truth out there. We want to add as much value as we can. And the great thing about these, especially for when an employer promotes this to their staff, there's no product pitching, no promotion, no sale, nothing at the end of it. This is just pure, unadulterated financial content and wisdom delivered in hopefully a more engaging style than what a lot of financial education is delivered through. So let's talk about financial well-being. This is what it really is about. A lot of people are suffering at the moment, and even though some people may be not affected, because of work, they're still working flat out, but they might have partners that are furloughed or partners that have lost their jobs. It is a difficult time, and we all need as much help as we can get. And financial well-being is inextricably linked with mental health and also with physical well-being. It's kind of difficult to have good physical health and mental health if your finances are a bit of a problem. So very good area to focus on. And the other thing is that financial well-being, a lot of it's in our mind rather than in the things that we do. 80% of the success in financial well-being is really psychological. It's our mindset. And 20% is the mechanics. But the industry talks a lot about the mechanics, the investments and the things we need to be doing. Actually, those are very logical. But the key thing is the desire to want to do those things. And if it's our psychology, which is so important, that will affect the way we feel. And the quality of our life is really the quality of how we feel on a daily basis. So if we can feel in control of most things financial, then we'll be feeling less stress. We won't be getting anxiety and stuff like that. So taking control of most things financial is the key thing. Now, there are 4 key pillars for good financial well-being, and I'm going to whiz through the 4, but I'm going to focus on the one. Then I'm going to introduce Darren, our expert guest today. And as the questions come in, if you have questions, put them through. I won't answer them during the session, but I will answer them at the end. So you can use the Q&A or use the chat box. Let us know what questions you have, and we'll do that piece of work. So the 4 key pillars are, number 1 is habits and behaviours. So living within our means, creating a situation where we're spending less than we're bringing in. Number 2 is to operate within low levels of financial stress. We don't want to be stressed on a daily basis. That daily stress is not good for our well-being. It's bad for our physical well-being. It's bad for our mental health. It's really not a good place. Short-term shock's not a bad thing. You know, if we get a little shock and we change behaviour, that's not a bad thing. We see something we don't like, we want to change that. Brilliant. Okay. The third area is a wealth creation mindset, which is where we have future-focused objectives and we have goals clearly defined. When those goals are bigger than the problems that life presents us with, then we can overcome those problems easier. It gives us much more resilience. You can actually improve your financial well-being just by, without actually changing the financial situation, just by having big goals where the goals are bigger than the problem. But the fourth pillar we're going to focus on today is the foundations. It's having solid economic foundations. And the key thing is here, a lot of these solid economic foundations can be provided for us through our employee benefits package. But solid economic foundations are made up of three things. Number one is an emergency fund. Okay, we all talk about saving into pensions, but where do we talk about saving for an emergency fund? So that's, and again, that's a bigger subject and another session, okay? But having an emergency fund is really important for our well-being. It stops us going into debt, because that's the second element of economic foundations, is to have no high interest debt. You know, those credit cards charging at 17, 18, 19, 20, 30, 40% a year, that's like driving the car of life with a handbrake on, having those things. We want to get away from that. But the third element of solid economic foundations is very much a psychological thing, and it's family protection. It's just knowing in our mind that everything's taken care of, making sure that whatever happens to us, our family are going to be okay. All right, and that comes from having a basic estate plan, making a will, and we'll talk about that with Darren in a moment. But the other thing is to make sure we've got adequate insurances. And this is where people get a bit confused. But what we need to do, we need to go through the process, make sure that we're okay, and then we can forget about it for a while. We can actually say, okay, I remember going through that process, everything's in order, I can forget about it until I have a major life event, okay? So what I'm going to do, we're going to talk about that particular piece, and your financial employee benefits can form a major part of it. But here's the problem: most of us, when we look at our employee benefits, it's just a list of products. What we want to do today is to bring those products through and give them real meaning in the context of your life. Okay, we want to make sure that has some meaning to you. So what does it all mean? How much do we need? All that kind of good stuff. So we're going to put a bit of meat on the bone. I'd like to introduce our special guest, Darren, who's the master of taking complex things and making them simple and talking about things in plain English. Welcome, Darren. How do you do? How's it going today? All right?
Good morning. Thanks for having me again. Thank you very much.
It sounds like all the best financial well-being people are called Darren out there, huh?
Maybe so.
Okay, brilliant. Look, I've got a bunch of questions for you, but just before we start on this, when we get into the insurances, I have a statement here, which was said by Winston Churchill many years ago. The guy was famous for his quality phrases, and he said this: if I had my way, I would write the word insure over every door of every cottage and upon the blotting pad of every public man, because I am convinced that for sacrifices that are conceivably small, families can be secured against catastrophes which would otherwise smash them forever. How powerful is that? So we're talking about spending a few pounds to make sure that the family does not have any pain. I think that is a great way to kick it off. So Darren, in your work, I know you're a financial advisor, fully regulated and qualified. Darren works with us. He's a very popular advisor because of the way he communicates. I've got some questions for you. We're going to try and dispel a few myths and understand a few things. So the first thing is, in a benefits package, most employers do provide some kind of life assurance for their employees. So the question is, it's normally known as death in service, is often what it's called. It's usually a multiple of income, but is it enough? What do people need to think? How do they need to think about this?
Okay, so first and foremost, it's a great benefit to have. It is nice to know that there's a multiple of your income coming out if you were to pass away. But we really need to know, is this enough to cover what we need? So there's various things to think about. First of all, make sure that you've got enough there to cover your debts, and then to maybe replace some income. But to get a real good understanding of what your needs could be, you can visit websites like the Money Supermarket website, confused.com. They have a really good calculator on there to help you establish if you have a protection need and what that need might be. But they don't just stop there. It also gives you lots of information about the life assurances out there and the other protection policies, how that can benefit you and how you can integrate that into your overall financial plan.
So can you just mention those websites again, and then what do people do when they get there?
Right, so there's Money Supermarket website, a fantastic site there, and there's also confused.com. Now, I personally have used the Money Supermarket website. When you go on there, under the insurance tab, you can look into life insurance, critical illness, and income protection. And it doesn't just give you the option to have a quote. What it does, it breaks down how this particular protection policy can actually help you. So it explains the benefits. It gives you an average cost, as well as when you should be reviewing your protection. So it's quite comprehensive, and it's clear and concise information for everyone to be able to use.
Brilliant. So when people do that exercise, I think this is where the power comes from. They work out what they need for their family, and there'll be a number attached to that. Once they've got to that number, they can look at what they've got from work. And it may be that what you get from work is totally adequate, absolutely fine. And if that's the case, you can tick the box, move on, everyone's happy. What about if there's not quite enough and somebody's slightly more?
Okay, so if it's not quite enough, then this is the thing to do. So first and foremost, work out what you need. So again, using those calculators, as I mentioned. Then look at what is available from your employer. Now, once you've worked out that, if it's enough, then that's fine, but review this on a regular, ongoing basis. But if it's not enough, which in most cases it won't be, it's then time to go onto these particular websites and start to do a bit of research in regards to what you can do to top that up. But don't neglect your employee benefits first and foremost, because they're there, they're readily available, and usually quite straightforward.
Great. So we're starting to see that we've got to bring meaning to these benefits rather than just be a list of products. Starting to actually do something powerful, for out in the context of our lives. So there's also, what about, we all have pensions. Where do they fit in with all of this, Darren?
So when it comes to pensions, a lot of people don't realize this, is that we should be nominating our beneficiaries on our pensions. Now, the reason this is so important, because maybe in the early stages of life when you're working, just starting out, your pension pot's quite small. But as you get in through your working life and your pot becomes even bigger, if, for example, worst case scenario, you didn't live long enough to enjoy your hard-earned money, that money will be passed over tax-free to your loved ones. And that ultimately forms a bit of a life insurance in a sense. So we shouldn't be neglecting our pensions, because they are a very key part of the whole overall financial plan. So fill out those nomination form guides on all of your pensions. It's extremely important that your loved ones can get that money tax-free and in a timely manner.
And I guess the same goes for their life insurance at work. They're definitely
exactly that. Exactly that. Thank you for bringing that up. So even with your life covers, what we find is a lot of times when we do decide to go and get our own life insurance, etc., we're not putting it in trust. Now, there's usually a little form with the package that you get, sort of the introductory package you get from the providers, and we're not filling that form out. There's a trust form in there. Please fill this out. It's extremely important that your loved ones can get that money in a very timely manner, and it doesn't form part of your estate. So it's a key thing there. Nomination forms and trust forms need to be filled out.
So that means they get the money quickly, and there's no tax on it.
Exactly.
Brilliant. Okay, so it's a bit of a no-brainer, really. But it's funny that I hear about 90% of people don't even do those trust forms.
Exactly, they don't.
Yeah. And so with the pension side of things, so if someone's got, if they work out how much life cover they need, they look at what they've got from work, and it's not quite adequate. But if they add the pension pot to that, and then it's more than adequate, is that sufficient? Is that what you're saying?
Exactly. So my point is that you can start to utilize our pensions as part of our protection plan for our family. Fantastic. Remember that pot, wherever you're building up, if you don't get to enjoy it, your loved ones can. And what they can do as well, they can create a bit of a legacy. So they could hand that down to their children or their loved ones. Again, it doesn't have to be lost. So, it's well worth doing.
Brilliant. Fantastic. Okay. So now I know that not all employers provide everything out there. So apologies if that's the case. But most employers pay their employees some sick pay for a while. Some actually, after a period of time, will actually insure that income for the long term, maybe 3 years, 5 years, or even till retirement. And that's called income protection. Yeah. So some employers provide it, some don't. Could you just explain a little bit about what that does, Darren, and how much people need and all those sorts of things? What do people need to think about?
So as you mentioned before, we do sometimes in cases where we have accidents or sickness at work, we do rely on our employer's sick pay, but that doesn't go on forever. So what you can do, as you mentioned, you can get a policy that basically once your workplace stops paying you, you then can insure your income up to certain limits. Now, the reason this is really key for everyone, because if you are sick, especially for the longer term, the last thing you want to be thinking about is, I've really got to just get back to work. This policy allows you to take the foot off the gas for a moment, focus on getting your health back whilst retaining your independence, because you can still cover your essential bills. Now, with this particular insurance, you can't cover in 100% of your salary because otherwise you probably stay off for as long as possible. However, what it's designed to do is to cover your essential outgoings. So your household bills, food, things like that, just to make sure that you can still maintain your lifestyle. And then you can focus on getting better and then returning to work, ready and fighting fit to go ahead.
I suppose if people could insure 100%, that might be an incentive to be ill.
Yeah, exactly.
Yeah. So it's got to just really there to cover the essentials, so you don't go under. It might go on the long term, but usually my understanding is they pay out for a period and then people get back to work eventually at some point.
Exactly.
That's brilliant. Now, it does get a bit confused around, you've got income protection which pays an income, but there's also another benefit which only a very small number of employers provide, but a lot of people actually consider this for themselves, and that's something called critical illness cover. Could you just explain what that is and the benefits of that and why people might want to consider it?
Okay, so critical illness pays out a tax-free lump sum if you are diagnosed with a specified illness, such as cancer or permanent disability. Now, the reason this is important because unlike life assurance that pays out a lump sum when you die, you don't have to die to get this money. This money comes out and it allows you to retain that independence. So you could use that money to pay off debt, replace some income, or make modifications in your home if you needed to. So it's a very key element here, and it might not be provided by a lot of employers, but it is something that we should be looking into because, as they say, statistically, we're inclined to get some form of critical illness much quicker than we are to die. So it is worth having. It's part of a robust financial planning process.
Now, I think going back, it's been a long time since I gave individual advice to people, but I think you can have a policy which pays out on death or critical illness, whichever comes first. Is that right?
Yes, correct. So you can have a joint policy which has a life element as well. So what it would do, it will pay out on the first instance. So if you was to become critically ill, it would pay out and then it would cease. Or if you was to die, it would pay out. So it covers you on both instances. You can get a critical illness policy with a life element built in as well. So again, they are available in the market.
Brilliant. So for a family, we're talking about from the basic insurances, we have money if we die, money if we're sick as an income, potentially money for critical illness, and then we've got the pension money on top, which acts a bit like life cover. So I think the key thing is here, we're starting to bring to life what we've got. A lot of us have already got a lot of this stuff, and we already have those solid economic foundations through our employee benefits package. The trouble is, if we don't connect the dots, we don't join that up with, it's just a list of products. So I think good news is chatting about it today, going through this exercise, you do bring through the value of those things rather than kind of gathering dust over on the side of your benefits package, you know what I mean? So with all of that, those are the insurances. But again, in terms of protecting family protection, some kind of basic estate planning needs to be considered as well. And we're not going to go into estate planning today in any detail or any technicalities, but a basic estate plan such as a will is pretty crucial. So just tell us the basics, Darren. Why should somebody write a will? Because half of people still haven't made a will yet. Why should people make a will? What are the problems if they don't?
Okay, so a will is ultimately you laying out your wishes of what you would like, your property, your possessions and stuff, who they would like to go to. Now, by doing that, you're making sure that when you're not here, those wishes will be carried out. However, by not having a will, you are allowing the law to determine where your money goes and who it goes to. And that might not be exactly what you want. But more importantly, it's the devastation that it brings to the family. Now, if it's okay, I would like to share an example here of something I've been through personally. Now, about 3 years ago, I was presenting to a client and dealing with financial well-being, which I feel quite passionate about. And I tend to talk to my family about it as well and nag them about getting their wills and filling out their trusts, etc. Now, whilst I was doing this presentation, I was getting loads of missed calls from a member of my family, and you ignore it because you're at work, you're in professional mode. At the end of the presentation, I'd called this member of the family back, sort of find out what's going on, and I just got the news that my brother had passed away, and he passed away at 41 years old. He had kidney failure, and it was, I can't describe it to you, it was horrific for the family. He's very young.
41.
Yeah, 41. He left behind a wife, 6 kids. So there's it's an impact. Now, the reason I say that having a will is so important and feeling like your trust forms and your nomination forms on your pensions is because we spent the best part of 3 years trying to gather his information, trying to get his money out so the family can still continue. Because one thing we've got to remember is, although we lose someone and we are grieving, we're mourning, the last thing we want to be worried about is getting red letters through the door or phone calls demanding payments, because your mortgage payments still go on, your rent still goes on, your household bills, they still continue. No amount of money is ever going to replace that person. But what having good planning can do is to get rid of the stress of the financial commitments, and you can focus on rebuilding your life and moving forwards. And I've personally gone through that, and I'm sure many people on this call today have been through the same situation. You can save all of that heartache by actually making sure you fill out those trust forms, fill out those nomination forms, and finally, please get a will. It will make a huge, significant difference to you and your family, or even if you're not here, your family, and if someone in your family goes, it will be a lifesaver to you. So it's very quick, very simple, and there's loads of sources you can get this help. Please do something today.
That was a really powerful story. Thanks for sharing it, Darren. I know that's obviously very painful for you and quite raw as well. The last thing a widow or widower would want is to have to deal with a messy estate without, probate and all that sort of stuff. So a will, crucial. There's other things that can be done. There's a few questions coming up on here, actually, which I just mentioned. People are talking about wills. Obviously, it's difficult talking about death, isn't it? Of course, but it's one thing that does happen to us all, guaranteed. We will all die at some point. So we have to deal with it. And whilst we're working from home and we're not travelling so much and less meetings, now's the time to kind of get some of these things sorted out, get the death benefit nomination forms completed, get the wills written, review the insurances. Absolutely, now's the time to do that. Now, there's quite a few questions on wills coming through. We do have another Financial Fitness Friday that we did in the autumn, where we talked about estate planning, a lot more meat on the bone around this particular subject. So I believe that is now on. If you go to YouTube and then if you search Financial Fitness Fridays, there's a YouTube channel and it should be in there. Have a look in there, okay? And then you can watch that recording of that Financial Fitness Fridays. Brilliant, Darren. So we are doing all right for time. We've got 6 or 7 minutes before the half-an-hour cut-off, and then we're going to start to ask questions. Keep those questions coming in, everybody. I can see them all building up, and I'm going to be trying to sift through them to make sure that I answer the ones which are going to help everybody that's on this session today. We do have a large amount of people on here today, and where this is kind of this sounds like a bit of a dry subject, wills, insurances for family, but when it's about family, it is the most important thing in our life. That is it, it's simple as that. And so interesting, there's been no dropout today on people on this session, that says a lot about you, Darren, coming across properly. And actually tackling and dealing with this is something we've got to deal with, but we keep putting it off. It's one of those things. But I think today we've got a bit of clarity, we've got a bit of direction. Question then for you, Darren, is what would be a useful next step for anybody watching this session today?
Okay, so first and foremost is just sit down with your significant others, or if you're just on your own, sit down with your own circumstances. Really start to look at your employee benefits, not just as a list of products. Now start to think, that life assurance, is it enough for me? Visit the websites, as I mentioned, moneysupermarketconfused.com, just to mention a few. Have a look and see what you need as a minimum. Now, prioritize. You might not be able to afford everything because there are budgets. We understand that people do have budgets, so make sure you stick to a budget so that way you can afford it. But prioritize what's important to you. Look at your employee benefits. If there's any shortfalls, then look in the wider world and see if you're able to top those up. Really do consider those. It's really important that, as you mentioned, Darren, now we have the time. Let's look at our finances. Let's make sure that we see the rest of 2021 a lot more control, less stress, controlled, relaxed, and in control of our finances. We really need to take and pay attention to our needs, really. And it's a very hard conversation to have. Death is never nice to talk about. Illness is never nice to talk about. But the reality is these things will happen to us at some point. And if we're prepared for them, we can go through that and actually say to ourselves, thank the past selves, I'm prepared for this. The worst case scenario has happened. However, I'm financially ready and able to get through it. Absolutely brilliant.
Thanks ever so much, Darren. So the key thing is here, from a financial well-being perspective, this is something we just got to do it. It's some people get confused. It feels like it's going to be difficult. It doesn't have to be. Use those websites and find out how much insurance you need for your family in cash, how much you need in income, how much you might want for critical illness, throw your pension pot on top. Do that piece of work. It might be that what you get from your employer is absolutely fully adequate, and that is brilliant, but suddenly your benefits have got real meaning. They mean something in your life. And the good news is, going through this exercise, even if there's some shortfalls and you have to go and buy a bit more, there's loads of ways of buying it online. You can even talk to advisors about it. buy that, put it into trust, do that bit of work. You can forget about it for a while. What tends to happen is you go through the process, get it done. It's the most important thing is family. Let's get that taken care of. We take that out of our mind. It's now something which we all have in the back of our mind. We've got to get round to it. We don't know where to get started. Now we've got some direction. Do it. Get it done. Forget about it. Because what you remember is how you felt. Financial well-being is psychology. It's a feeling. You know that you've taken care of your family. You can forget about it. You can remember how you felt, even if you forget all of the detail. And then what happens is, next time there's a major life event, like a child or a divorce or a wedding or a house or whatever it might be, a new job, big pay rise, that's your trigger to go and review it. Okay, that's your trigger to go and review, go through that process again, make sure you feel happy with the situation, and then forget about it again. So that's what I've picked up over the years. So we do have a few questions, and we're coming around to the end of that. So what I think I'm going to do is, for those of you that need to leave at the half-hour mark, feel free to go now. When you come out of the session, you'll be taken to a feedback link. Please, please, please. Oh, I do need to show you something for regulatory purposes. Oh, let me show you that. There we go. I think I've got, I have to do some caveats here. Don't miss next Friday's session. How and where to find good quality financial guidance. Another special guest there. That's the topic. There's the caveats I need to put up to keep the regulator happy and my marketing team from telling me off, because I easily forget that side of it. So I'm going to stop that share again. So those of you that need to go, thanks for jumping on board. Hope you got something out of it today. Good luck on your journey to good financial well-being. Please give us a feedback. Go on the feedback session, give us your feedback, tell us what you thought, score it, what you liked, what you didn't like, and then any suggestions going forward. Help us make this a better experience every step and stage of the way. So loads of thank yous coming through there for those that have to go. We've still got 95% of the people that were on the start on it. So let's look at the questions. Are you ready for some questions? I'm going to put you on the spot now.
Yeah, I am.
Okay, so right, let's have a look what we got. So what's the best way to do a will? Home kit or the solicitor professional? I think you know the answer to that one. It's too important. Would you get me to work on your heart if you needed heart surgery? Probably not. You wouldn't do a DIY job either. But so, these sort of things, the more you pay, the better it is. I mean, you can get a very basic, cheap mirror will, which is really just going to pass over everything to your other half without all what it's called the law of intestacy, where they've got a will, it's already been written, it's on the shelf. And if you don't write a will, it's already written for you. But it's not your significant other isn't necessarily the one that gets all that money or that asset straight away. So if you want that to happen, you can set up a mirror will for just literally a few £100. That can be done. You can search them online. There's different companies out there that offer will writing services. But usually what happens is that evolves. I've just done my own will a few years ago, updated it. It cost me £1,000. A bit more complicated. I wouldn't say it's going to cost that much for everybody, but certainly, from a few hundred to £1,000 is kind of what you need to be looking at. But I tell you what, it's money well spent. It really is. If you could write a check out to get the people you leave behind out of pain, that's cheap. So another question. What does probate mean? Well, that's just a period in between organising an estate and passing the money to different people and death of the person. So there's a period in there, and the solicitor organises it. It's called probate. It's just that period where they organise your affairs. Okay, there's a question here about critical illness cover and things like that. Is there anything you can do? I'm hopefully not putting you on the spot here, Darren. Is there anything you can do if you were diagnosed with a disabling illness before you had any cover?
Not particularly. It is quite difficult to get insured if you've already got an existing serious illness. Yeah. There may be some insurers out there that will cover, but it might be extremely expensive. Or what they might do is insure you but exclude that illness, so they won't cover for it. So there's not to say there isn't something out there, but it will be quite difficult to be insured if you've already got serious illness.
So there's another question, and which we need to get out there actually, and that is, what are the pros and cons of relying on your employee benefits as the only way of providing cover for your family?
Okay, so the pros of using the employee benefits is usually cheaper, and there's less medical questions, and you can get cover more or less straight away, and which is great. That's great news. But the negative could be if you decide to leave that employer for any point, your policies will cease immediately. The problem with that is then you might not get insured again because you may have illnesses, you may be much older, there may be other things that could make it more expensive or hard to actually insure you. So it doesn't mean don't go with your employer. It just means have a wide open view in regards to your planning and your long-term planning, and review it on a regular basis ultimately.
Absolutely. Somebody's mentioned here that it's worth noting that inheritance tax is 40%. Now, the reason I bring this one up is a will doesn't negate inheritance tax. It might help a little bit. Inheritance tax is still there. There are ways that people can plan around inheritance tax. We are running a session, and it's going to be 2 days after the budget, and it's about tax. It's going to be about income tax, because that's a big part of our lives. Then it's going to be on tax on the investments we have, like capital gains tax. And then if you've got anything left over, you can pass it on, and it's taxed at 40% inheritance tax. So we're going to talk a lot about that on session 4 of the winter series. So on March the 5th, and it'll be a couple of days after the budget as well. So it'll be right current and up to date. So if you want to find out more about the inheritance tax, income tax, capital gains tax, and how to take advantage of all the tax reliefs and allowances you're entitled to throughout the whole of your life, if you did that, and you redirected those savings into your future and into investments and savings, that's not a bad place to be. So get yourself onto that session on March the 5th, the tax planning session we're going to do. Sorry about that. Okay, any other questions? Right, here's a question. Are the nomination forms filled out with the pension company, or is it something you fill in with your will?
Okay, so you fill out with the pension company themselves. So each pension that you have, there will be it's going to be called an expression of wishes form or a death nomination form, but just fill them out for every single pension that you've had. Very, very straightforward, very easy to do.
Brilliant. I've been told that 20 minutes before 11, somebody heard me swearing. I thought I was muted, so I do apologise for anyone that got on really early and probably, oh dear, how embarrassing. Never mind.
Can I leave people with something to think about when it comes to insurance? Because a lot of time when we come to insurances, a lot of time we say, what if it doesn't happen? You know, I've wasted that money. And that's one of the fair challenges that you get. But I would say this, think about it like this. If you had a printer, just a normal printer in your garage at home, and it was constantly printing £50 notes every single day, consistently, just constantly did it, would you insure that printer? And in most cases, you probably say, yes, why wouldn't I? That's a no-brainer. You are that printer. You are the one producing the money for yourself and for your family. So if you would insure your phone, you would insure your car, you would insure your house, insure you, because without you, there is no materialistic items around whatsoever. So that helps people to get over that. Should I really be insuring myself? Absolutely, you should, because without you, there would be no phone, house, car, etc. So really start to think about it in that way. I hope that helps to kind of clear that sort of foggy bit up.
Brilliant. So there's a question here, which if you can't answer that, I probably can. It's old news, but somebody said, do you know what percentage of people end up being off work sick for more than 8 weeks? Now they say young people, so then how do you differ? So it's a difficult question, but my understanding when I was setting up these group income protection policies, that roughly about 1 in every 250 people claimed annually, 1 in every 250. And the trouble is that the other 249 didn't value it because they weren't engaged with it, because they kind of forgot it was there. It is a really valuable benefit if you're lucky enough to have it. But if you haven't got it, you should really, really consider buying some. When I was giving individual advice, I used to deal with a lot of small businesses and lots of one-man band self-employed people. And it was probably the first thing I persuaded them to do was to protect their income, because without that, our financial well-being is pretty poor. So, so that's hopefully the answer to that question. What other questions have we got here? There's some questions here about pensions, which is not really for today, but there are some on the YouTube channel, Financial Fitness Fridays. There are definitely some pension-related sessions on there that you can find out about. Somebody said, is this recorded? Yes, this is recorded, and then we'll cut out my swearing at the start, obviously. We'll chop that off, and that'll go onto the YouTube channel. It stays on there for 3 months, and then it has to be reapproved from a compliance or regulatory reasons. If it can be reapproved, it goes back on. Sometimes, though, with different tax years and legislation changes, the information becomes outdated, so it's not there forever, which is a real shame. Okay, what else we got here? I've got a will, but I'd like to start up a trust fund. How can I do this in the most cost-effective way? massive question. If you speak to a decent lawyer, will writer, they can put trust in wills to collect certain assets like your death in service and pension. Again, it's another big subject. If you want to find out more about that one, I urge you to jump on the estate planning session that we did in the autumn. That's on the YouTube channel. Here's a good question. If you have a life policy and you have a life component in your critical illness, will both pay out if you die?
Yes.
Does this work?
They would, absolutely. So if you were to die, it would absolutely pay out. But what would happen is that critical illness policy with the life element would cease. So it wouldn't pay out on death, and then obviously a later critical illness, you wouldn't be here. But yes, it would pay out on death. Yes, no problem with that at all.
Okay, that's brilliant. And the only thing to think about with the critical illness policy, if it's a joint life or critical illness policy, is you can't write the insurance policy to trust.
Correct. Because
you can only pay the death benefit in trust, then gets passed on. And again, the benefit of the trust, quick, no tax. Okay. Let's have a look. How are we doing for time? Doing all right, actually. So, right. So there's some questions that are just far too personal, or they're not related to particular. Okay, so another question, a bit like the last one, just to clarify. So where should trust nomination forms be held? With our HR, with the insurance provider? I presume we should have a copy at home somewhere as well.
It's with the insurance provider themselves. They will send out the form, you would return the form, and they'll give you confirmation that that's in place. So you have that as your evidence and as your record. And I would also recommend reviewing this on a regular basis, because what some people have done may have a policy they've had for 10, 15, maybe 20 years and haven't updated those trust forms. So make sure you've updated them, because your family may have grown, you may have changed your circumstances. So please keep on top of those as well.
Question here we can answer easily, even though it's slightly off theme, and that is, does inheritance tax apply to property or just the money?
It applies to everything, anything that holds a value.
Okay. How expensive is income protection insurance? Have you got any ideas, Darren?
Good question. So if you go onto the Money Supermarket website that I talked about, under insurance, if you go into income protection, what it does, it gives you a grid. So based upon average age and the average cost for that person. So you can get a rough gauge on a non-smoker being 30 and wanting a certain amount of income protection. Again, it's going to be down to your own personal circumstances, your own job and your own health, but that gives you an indication.
Fantastic. I've got quite a lot of pension-related questions. I really shouldn't be asking you these ones, but it's a really obvious question. I'm sure most people on here would be able to answer this for themselves. What's the general view on contributing more to your pension early on?
Sorry, would you contribute more earlier on?
What's the general view? You're contributing more to your pension early on.
Do it. Absolutely. Pay what you can when you can. The earlier you start, the better. Life comes at you fast. There's things that are going to knock you off course. But if you get into the habit from a young age of putting into your pension, that will reap benefits as you go through the years. It's simple, no brainer. Put in what you can when you can. The younger, the better. Okay.
Got time for a couple more questions. I've got a good one here, actually. I think this is a good one. Can you take out a second, it says private health, so the income protection scheme. So can you take out a second income protection policy while you still have one at work? Is it okay to have two? Reason being is, would it be cheaper to start a private health policy when I'm younger rather than wait until I leave my employer? Really good question.
Very good question. So yes, it is usually better to start income protection policies young as possible, because they tend to be much, much cheaper. You can have more than one. However, just as I said earlier on, you can't insure 100% of your salary. So just be aware of that. Typically between 50 and 70% of your salary can be sort of insured. The money paid out from income protection is tax-free, okay? But it's paid out less any state pensions state benefits that you can claim. So it will take off statutory sick pay and stuff like that as well. So just be aware of that. You can never insure 100% of your income.
Okay, brilliant. Now, I don't know if you know about this, Dan. I haven't heard this, but I certainly think we need to go and find out, because it's now been mentioned a couple of times. some people are saying they think that income protection schemes are not available at the moment. Insurance companies have backed out the market because of the pandemic. Have you heard anything along those lines?
Right. So there are some still available. However, they are relatively expensive because of what's been going on. You are absolutely right. It has changed the market, but loads of the market has changed. There used to be something called accident, sickness, and unemployment. That market has sort of gone quiet. Income protection is calm and quiet at the moment. However, once we get at the other end of this pandemic, the market will come back. I'm sure of it. So just keep an eye out. There are some out there, so don't delay it because you might forget. So still look into it. If there's not enough available at the moment, just be patient. The market will come back into fruition.
Brilliant. I think that will do for now. I think we're coming round to the end. Look, we've done our 45 minutes. There's quite a few questions on here, a bit private or a bit technical. So I'm going to pick some of those up and pop the answers back out to those individuals, if that's okay. But thanks for jumping on, everybody. I hope you got something out of today. Thank you, Darren, for doing a splendid job and really bringing to life those really valuable employee benefits that we've got. Hopefully after this now, you're seeing it's not just a list of products. It really does provide a significant value for us in our family lives. So thanks very much. When you come out of this session, everyone, you're going to be taken to the feedback questionnaire. Please do that for us. Really do need your feedback. Also, tell us what other things you want us to talk about. We'll be doing this for another 3 weeks, round to March the 5th. Then we'll do a spring one, we'll do a summer one, we'll do the autumn one again. So if you keep on telling me what you want, we'll keep on delivering them. Hope you got something out of it. All the best to you. Good luck on your journey to financial well-being, and we'll get back to all the rest of you. We've still got hundreds on here. We'll answer as many questions as we can. Okay.
Thank you, everyone, for having me. Thank you, everyone. Be safe.
Thanks, everybody. Take care. Thanks, Darren.
Thank you very much.